Okay, welcome to the Gekko Trading Beginners course. In this course, I'm going to be giving you guys a quick introduction to the world of trading. So, in short, we are going to be exploring the world of investments and financial decision making. I'm going to be giving you guys some relevant information about the forex markets, given that it's very easy for you to get lost with so much information available on the internet, which was one of the things I faced when I first began my trading. And it's easy for you to focus on the wrong thing, given that most of that internet information is accessed by 90% of other traders. Therefore, it means that you don't really have an edge over the markets because you guys are trading the same way and you have access to the same knowledge. Anyways, without further ado, let's just go to contents, right? So in this course, we're going to be talking about why trading, what is forex currency, trading platform leverage, trading game app, which is an application which really helped me get started in this trading industry. And I'm going to be giving you guys a quick introduction to the Gekko trading analysis. So this is one of the questions which we are asked most often, like why trading? Why did you pick trading as a career? Why did you choose to pursue trading, right? Because it can be stressful given that you'll be dealing with money, which makes most people emotional and make the wrong decisions, right? You become to be impulsive and all that. And the answer is simple. Personally, for me, is time, location, and financial freedom. So my goal is to inspire pure freedom and empowerment. Imagine being able to make a living for yourself from wherever you are and being able to support your family and most importantly, time, which is the most important and valuable asset we have. Therefore, I believe that it is critical to be able to manage your own time and take accountability of it. I mean, there are multiple ways of doing that, but I can only speak of what I know of, which is through trading, right? So I'm going to highlight some of the benefits. Gives you time freedom, as I mentioned earlier, and location as well. You earn at the comfort of your own home, which is location freedom. And wherever you are, you can start with low capital as well. And the market is flexible and open 5 days a week, 24 hours. So if you've got work, you can always trade before or after work or on your free time, whichever time you find best. So then we're going to go to one of the questions which most people ask, like, what is forex? Some people think it's gambling because of lack of understanding, but the forex industry have been here for so long, guys. So what is forex? I could say that the financial markets are platforms where financial assets such as stocks, bonds, currencies, and commodities are bought and sold, and these markets play a fundamental role in the global economic by in the global economy by enabling the efficient allocation of resources and facilitating investment and economic growth. But that's complicated for the newbies. So let me simplify it for you guys, right? Um, Trading is basically exchanging goods, right? Buying and selling. Let's use gold as an example. Let's say I buy a gram of gold for $50 and then I go and sell it for 60, right? This is an exchange of goods for money. This is trading in general. Trading in the financial market is the same thing. We will be buying a share, for example, when we buy currencies. We buy it for a certain price because we want to sell it for a higher price. So we will be buying low to sell high, or all the other way around. So our job as trader is to predict the market movement, when the market is going to rise or drop, so that we can benefit from it and make money from it. And for that, I have a strategy that can help you guys with the prediction, but that's a topic for later on the course, right? So I'm going to give you another example. Given that pretty sure you guys don't have an understanding yet of how this whole thing works. So forex trading is similar to the currency exchange you may do while traveling abroad. Let's just say a trader buys one currency and sells another, and the exchange rate constantly fluctuates based on the supply and demand. Let's say you are in Europe and you have 100 euros, then you travel to the USA, you get to the USA, and then you decide to go shopping. Then perhaps you happen to bump into a piece that you also came across in Europe, going for 100 euro, right? Here in the USA, that same piece is also costing you $100. Does this mean that the price is the same? No. And why is that? Because you have to make the conversion, and we can do this together. Suppose that the euro USD exchange rate is going for $1.20 and you'd like to convert 100 US dollars into euros. So what you do is you simply divide the 100 by 120. The result is the number of euros, which in this case is 83.33 cents. And when converting euros to US dollars means reversing that process. Multiply the numbers of euros by 120 to get the number of US dollars, right? For instance, say you want to convert euros to US dollars, and at the time of this revision, 1 euro is worth $1.09. This means that your exchange rate is $1.09. And if you are planning on taking 100 euros, which you would multiply 100 by 109, and the answer would be 109. That's how much money you have in dollars after the exchange. Much like stock traders, they buy and sell different stocks. They buy it at the current price, hoping that the value of that stock will rise when they sell it and will get profit. So, as forex traders, we do the same. We essentially attempt to buy low and sell high for a profit. But the difference is that the asset that we are trading is in forex trading is mainly currency and all that, right? So let's speak a little bit about currency. Let's speak about currency. So forex trading is the simultaneous buying of one currency and the selling of another, or the buying and selling of money from one country against the money from another country. So currency are traded through a bank, a broker, or a dealer, and are traded in pairs, right? For example, the euro and the US dollars, which go by euro USD, or we could say the US dollar and the Great British Pound, which is the USD GBP. These are some of the pairs that I mainly trade. So trading forex can be confusing because you're not buying anything physical when you are buying a currency. Think of it as if you are buying a share in a particular country, right? For example, when you buy US dollar, you are in effect buying a share in the US economy, as the price of the currency is a direct reflection of what the market thinks of the current and future health of the US economy. Thus, the exchange rate of a given currency versus other currencies is the reflection of the overall condition of that country's economy compared to the other countries' economies. So now we are going to be speaking a bit about the currencies we mainly focus on. The most common traded pairs are made from the most common and actively trading currencies, which are called the majors. So the list of currencies below consists of the majors. We got the USD, like the US dollars. We got the euro, the European euros. Then we got the GBP, the United Kingdom pounds, the Great Big pounds. And we got the JPY, which is the Japanese yen, and the AUD, which is the Australian dollar, and CHF, the Swiss francs, and then the CAD, which is the Canadian dollars. So these are the most commonly traded pairs, and then these are the majors because they provide a lot of liquidity on a daily basis. So now we're going to go to the next topic, and we're going to be speaking about our trading platforms, which is which is something very important, especially in this business, to use these three. Um, I believe that it is essential for you to use TradingView. Personally, for me, this is just my personal point of view. I use both, but I mostly do my analysis on TradingView and then execute my trades on MetaTrader 4 and MetaTrader 5. This is why these are important. So, a trading platform, in short, is a software or a digital interface provided by the financial institutions or brokers, right? That allows investors and traders to execute transactions in the financial markets. It serves as a virtual marketplace where various financial instruments such as stocks, bonds, commodities, currencies, and etc. can be bought or sold. Here are the trading platforms we use to analyze the markets and execute trades. Let's speak about MT4 and MT5. So both MT4 and MT5 are the official version created and distributed by MetaCode software. The new MT5 version is considered to be superior for stock trading and order management, whilst the older MT4 platform is considered to be superior for forex trading, which is the one that I mainly focus on. So TradingView. TradingView is basically a cutting-edge web-based platform that caters to traders and investors of all skill levels, offering powerful tools and real-time data to make informed financial decisions. With its user-friendly interface and extensive features, TradingViews have become a go-to platform for traders across the globe. It offers lots of cool features and helps you analyze the charts or improve your trading, like chart replay and a lot of other things that you might find that will be really helpful. So it's important that you familiarize yourself with all of these things, right? Um, so how to open a buy or sell position? So basically, I usually analyze on my PC, then open my position on my cell phone, which is quicker because I move around a lot. So then I check and manage the position as I go through the day, which I find easier. So in short, you go to quotes, type the instruction you want to trade in, type trade. Then you set your order parameters, e.g., you must put your lot size, stop loss, take profit, and etc. Then you can type buy or sell depending on your analysis. Don't just enter trade without analysis, guys. So buy if you believe the price is going to rise from your point of entry. Sell if you believe the price is going to drop. So then after we go to the next topic, which we're going to speak of leverage, right? We're going to be speaking about leverage. So what is leverage? In short, leverage it is when you use borrowed funds, which is debt, for funding the acquisitions of assets in the hopes that the income of the new asset or capital gain will surpass the cost of borrowing. It is known as a financial leverage. So investors use leverage to enhance the profit from forex trading. The forex market offers one of the highest amounts of leverage available to investors. Leverage is essentially a loan that is provided to an investor from the broker. So the trader's forex account is established to allow trading on margin or borrowed funds. Some brokers may limit the amount of leverage used initially with new traders. In most cases, traders can tailor the amount or size of the trade based on the leverage that they desire. However, the broker will require a percentage of the trader's notional amount to be held in the account as cash, which is called the initial margin, right? So now we're going to be speaking about types of leverage ratios. So the initial margin required by each broker can vary, right, depending on the size of the trade. Let me give you a quick example. If an investor buys 100,000 worth of Euro USD, they might be required to hold 1,000 in the account as margin. In other words, the margin requirement will be 1% or 1,000 to 100, right? So the leverage ratio shows how much the trade size is magnified as a result of the margin held by the broker. So using the initial margin example above, the leverage ratio for the trade would equal 100 to 1, which is 100,000 to 1,000, right? In other words, for 1,000 deposit, an investor can trade 100,000 in a particular currency pair. So now we're going to be speaking about the trading game app. This is going to be a very short topic. So as I started up, I had no idea how to learn more and get familiar with the markets. Then I came across the trading game app, which is why, as beginners, I also suggest you guys check it out and learn a couple basic things from it. As the goal is to learn to trade 10 times faster. So give it a try. So now that you know more about the business, let's move to the next chapter, right? Which is going to be a quick introduction to the Gekko trading analysis. Okay, so the strategy basically consists of three things: the timing, the pattern, and the level. So I analyze the market and take trading using the BTMM method by Steve Morrow. So that's what I'll be enlightening you guys on. As I mentioned, the pattern, the timing, and the level, which I'm going to draw it for you guys, right? So first, let's talk about the timing. So the session times. These are the session times, which is the Asian from 8:30 p.m. to 3 a.m. Then gap time from 3 to 3:30. Then the London session starts at 3:30 a.m. till 9 a.m. Then gap time from 9 a.m. to 9:30, and the New York session starts from 9:30 to 5 p.m. Then we have the end of the day gap time, 5 p.m. until 8:30. Then we have the Asian, right? So another thing to be aware of is that all of these time are Eastern time, which is New York time. So without further ado, let's just dive into the pattern, right? So now let's talk about the pattern. So this is the pattern that they use to trap traders and induce traders to commit themselves to the wrong trades. So This same pattern happens in a daily basis, and it can also happen in the weekly, in space of a week as well. So in short, let me dive into it. So we got the agent session. In most cases, they accumulate throughout the agent session, and then at the end of the session, they make a fake move, right? Remember the timing I gave you? Yeah, so at the end of the agent session, let us go to the timing. The end of the agent sessions, which is like around 3 a.m., one from 1 to 3 a.m. to 3:45 at the end of agent session. And at the beginning of the London session, there's usually a fake move that they're going to make to induce traders and trap traders to go to the wrong direction. So in most cases, this is what happened. They accumulate throughout all of the agent session, right? And then at the end, they'll make three pushes, right? They'll make three pushes, one, two, three, to induce traders to go low, and then they'll pull back and to induce traders to go down, right? They will validate most of other traders setup, especially if you use most of the information which is available on the internet, right? You are going to enter on the wrong side of the market because you can see one, two, three pushes, and you guys just assume we are going on a downtrend. And when you see price going like this, and you just assume it's a accumulation, right? And they induce all of the breakout traders, those ones that like to trade the Asian session breakouts. They also induce them to take trades on the wrong side of the markets, and then they pull back, go down, pick up the remaining orders, and then pull back, making a W formation. And then we see three levels of rise, or we see three levels of drops. Let me go to the chart so I can show you this. This exact pattern that happened about 2 days ago on USD JPY. Okay, so as we dive in the chart, we can see the example of the pattern that I've showed you. We have Asian session and we have the fake move here out of the Asian session. In most cases, I like the Asian session to be less than 50 pips. In this case, it's 98. But you can still see the pattern that they made the fake move after the Asian session, right? In the beginning of the London session, they made the fake move, and we saw one, two, and three. And over here at the end, we can see the M pattern the next day at the end of the Asian session, at the beginning of the London session again. So these guys, they have the same move, they make the same moves, and this is some of the things that most of the other traders, they are not aware of, and they fail to recognize in the market. They make the same move, but the only difference they make is they change the timings, right? They change the timings of these moves just to keep you confused. So on this course, I'm not going to be diving a lot into it. I'm just going to give you a quick introduction into it. As you can see, we also have the downtrend. We have the Asian. They accumulate throughout the Asian, and they make the fake move at the beginning of the London. One, two, three pushes to the upside, and then they run the trend, which is the market maker trend. And they in most cases they reverse throughout the New York. This can happen on a daily basis, or it can happen in the space of a week. Um, I can show you this pattern as well that happened throughout this exactly week, so you can see how you can actually see these throughout the charts, and you can benefit from these setups, right? Let's just go to the charts. As you can see, we have here, so okay, as you can see, we have here the Asian session. This double black line shows the beginning of the week. This was Monday. So price went up one, two, three, and small to the upside. The trap traders up here came back, they consolidated and they evaluated the positions. They went back a second time to get whoever was there, whichever orders, because most traders with the same knowledge, they choose to put the same stops and the same entries at the same places, right? As in the breakout traders and all that. They went back making an M formation. As you can see, also TDI, we have an M formation, and they wiped them out. They wiped all of the other traders which were on the wrong side of the market, got wiped out, right? And then they consolidated. And on the second day, as you can see, they went one, two, three to the upside, and they dropped again. And you can see, like yesterday as well, as we benefited from this trade, he made one, two, three hits to the upside as well after the Asian session, and we saw it drop until the New York session, and we see what? The reversal. The reversal most often happens in the New York sessions, as you can see here. So these are very simple things that most of the other traders, they don't have access to this knowledge. But we are thankful to Steve for his method, the method that he made. so that we can benefit from all of these setups. So for this course, this is just the introductions. Therefore, I won't be giving you a lot, just the introduction, so you are aware of some of the setups and some of the strategies that we use to benefit from the market and make a profit out of it. So in the next course, I'm going to be diving a little bit more on this strategy and giving you the rules and the setups which you are supposed to look for and the exact timing, as I mentioned earlier, so that you guys can benefit also from this strategy and make the best of it, guys. So, thank you guys for sticking around for the presentation. This was just a quick introduction, as I don't want to flood your minds with a lot of things, so you might end up confusing. So, if you are a newbie, focus on the basics, and then on the next course, I'm going to be diving a little bit more on the setups and the patterns and the levels as well, so you can be able to understand and actual benefit from it and actually take trades when the market's using this same setup. So, thank you guys for showing up. Signing up now.